Hey guys, this is June Collier, and in this particular quick training video, I want to talk about leveraging stocks as a renter. You know, in some previous videos, I've talked about owning the stock and actually renting your stock out to others. Today, I want to talk about the opposite side. I want to talk about a person who actually rents a stock, or you pay as a renter. And so I want to share this with you today. As we can see, the market is down today across the board. If you look at the S&P 500, the Dow, and the NASDAQ, they're all down today. Today is January 30th, but there is one particular stock that is doing extremely well. Even though the Dow is down, Microsoft is up, and it's up $4.13 right now. Based on the Yahoo Finance ticker symbol here, MSFT. That's about 2.4% up from the previous day. So about 2.4% up from the previous day. Why is Microsoft up? Microsoft is up. If we go down here and start looking at some of the news, you're going to see that yesterday, as the market closed, Microsoft reported its earnings. Okay, it reported its earnings. Also, you'll see that it says Microsoft beats on top and bottom line on the strength of cloud. So you guys have heard me talk about top line revenue growth as well as bottom line revenue growth, and Microsoft is continuing to have increasing earnings on both the top and bottom line revenue growth. And so today we wake up and we see that while most other stocks are down, Microsoft is up today about 2.3%. Now, what does that have to do with you being a renter renting this particular stock? Well, you could actually go out and own the stock at $172 a share. So you could go and, take some money and go buy the Microsoft stock, and your stock would have been up 2% today, but you would have had to pay $172 a share for the stock. Let's take a look at what it means when I rent the stock. What that means is that somebody else owns the stock, but I go and say, hey, I think this stock is going to rise in the future, and I'm going to pay you X dollars for the stock. So again, if we go over here to options and just kind of look at the Microsoft options, I'm going to go out and I'm going to show you what I typically do when I become a renter. So I don't like to rent short-term options. I like to rent long-term options, which is called leaps. So I'm going to go here to the options chain. That's what this is called. It's called the options chain. And I'm going to look at this stock, say for January 21st, 2020. I'm sorry, 2022. So that's 2 years out from now. So 2 years out from now, Microsoft currently is trading at 171. 2 years from now, do I think Microsoft is going to be trading for higher than 171? So if I think 2 years from now, Microsoft is going to be trading higher than 170, then if I pay $25.65, I could actually rent the stock for $25.65. Now, again, here's what has to happen. If I rent the stock for $25.65, so that's $25.65 times 100 shares, it's going to cost me $2,565 to have the right to own this stock. Okay, so that's $2,500 that I've put up for 100 shares of stock to control 100 shares of stock. Now, that's a big difference between 100 shares of stock if I just went out and bought 100 shares of stock for $171.97 times 100 shares of stock. That's $17,000. So I could control $17,000 worth of stock with $2,500, and I'm giving myself 2 years to be right. 2 years for me to be right on this stock. Now, if you bring the date in closer, then that same option, that same 175 option, if I bring that date in closer, let's just say that I do it for June 2020. which is this summer. What we can see for June 2020, that same option is now going to cost me $7.80. But that's because I've shortened the time. And if it does not go above 175 by June of this year, I'm going to lose this entire $7.80. So the further out, the more it costs, but it gives me more time to be right. Now, let's see this in practical terms. So I'm here inside of my E-Trade account. And what I want to do is I just really want to focus on Microsoft right here. So you'll notice that I bought the January 15th, 2021 135 call. Now, what is Microsoft trading at right now? It's trading at 171, 172. So let's take a look and see, when did I buy this? I bought this back in September 5th of 2019. I said I wanted the January 15th, 2021. So I gave myself some time. I gave myself a little more than a year for me to be right on this stock. So I said in 2021, I would pay $135 for the stock. Well, the reason why I bought the stock at that price, I paid $19.05 for the right to own the stock at 135. I paid $19. So that was my rent money. So $19 times 100, that would be $1,900. Okay. Today, the stock is trading at 171, which means that I could actually go and buy this stock at 135 right now and turn around and sell it for 171. And that would give me a nice profit. Or because I have the contract to buy the stock for 135, I can actually go and sell my contract for $41. So notice I bought the contract for $19.05. I can sell the contract right now for $41. That's going to give me a 116% return since September. Now we're just in January. We're at the end of January. So if we go October, November, December, January, that's 4 months. In 4 months, I was able to turn this into a 100% return. That is what we call leverage. So that's why sometimes a person might want to be a renter instead of an owner, because I'm now leasing the house. And if the house appreciates above what I have agreed to pay for it, I now have a profit. And I hope that makes sense. And that's what I do with when I become a renter of a stock. I actually like to rent long term. And so this is a perfect example. The other thing that I want to show you is that Microsoft grew today by 2%. But when you are leasing, because you're getting it at a lesser price when you lease, the leverage is different here. So even though the stock is up today by 2%, my option is up by 10%. Let's go back and look at that real quick again. If I go back here and look at the stock here, we're up 2.37%. The stock is up 2% today. But if my leap or my option is up 10% today, right? So when the stock is up, 2.3% and I'm up 10%, it's like 5 times leverage that I have on Microsoft right now. Hopefully that makes a lot of sense. And so that's how I can have 100% return on my investment in 4 months, even though the stock itself did not grow 100% in the last 4 months. It's because I have the lease, and now my lease has become valuable, and I can sell my lease. I don't even have to buy the stock. I can actually sell my lease to somebody else for $41 when I paid $19 for it originally. So I hope that this makes a lot of sense for you guys. This is really the way that I have been able to grow my portfolio over a extended period of time. There are some risks associated with options, and that is that the option could expire worthless if you don't have enough time. And so again, I like to buy When I'm renting, I like to rent for 2 years, a year to 2 years. That gives me enough time to be right. When I'm selling and renting it out to others, I like to rent it out to others for 30 days. Right? So I just got a little strategy here that I use with my trading. So hopefully this makes sense to you. Hopefully you enjoyed this this training. And guys, we'll be back again to show you some more interesting ways to trade stocks.